The world is dealing more and more with political spikes, moments of real tension, and that makes central banks' jobs so much harder, given everything that we're looking at. In terms of central bank policy, do you see we're going into another wave of cuts and stimulus?
I think it would be unwise to do so, but I wouldn't entirely rule it out, because at the moment there is limited options on the table for many heavily indebted foreign governments, where the fiscal room for manoeuvre remains constrained. Having said that, you do see a bit of a more widespread narrative of the limits to monetary policy from key monetary policy makers, as they acknowledge that a collective race to the bottom on interest rates does no one any favours in the long run. And the question, I guess, will be who wants to be in the crucible testing the tolerance of bond markets to an expansionary fiscal policy. We've seen a bit of it in Canada, but as yet quite constrained. Do we start to see it in some of the major economies, and principally the Eurozone, where the pleas from Mario Draghi have been going on for more than 18 months? As he has watched his favourite measure of inflation plummet back to the levels below, in fact, when he started the quantitative easing programme.
You mentioned that we've had this chorus of people outlining the limits of monetary policy. One of those is Mario Draghi, and yet it might be some of those who've been making those comments who are forced to do more on the monetary policy front, even if they themselves see the limits. I mean, Europe being a case in point, the ECB being a case in point.
Yeah, I mean, we get the ECB meeting later in the week, and I don't think the market certainly doesn't expect any action, given the way corporate bond yields have headed since the corporate bond buying programme from the ECB commenced. But you're right, there is some of the people who are making these pleas recognise that when they're in the foxhole, they may have no choice than to go lower on rates and to look at some more extraordinary measures outside the toolkit that we've seen thus far.
The great debate is this. We've got the political situation and you've got the central banks. My question to you is this. Looking at the 10-year government bond yield in the United States, Brexit relief dampens the demand for havens. So you've seen this turnaround in yield. My question is, what is driving bond yields? Is it the lack of belief in inflation returning, or is it the global political spikes? I mean, that's the real crux for markets, isn't it?
I think it's the former. I think it's the lack of expectations that inflation is coming back to those seemingly meaningful targets from central banks. The equilibrium rate of interest that is required to deliver the inflation targets in most developed economies is now negative. It's a negative interest rate.
Okay.
That is an extraordinary set of circumstances, but that is structural. A lot of that is due to an ageing population. A lot of this is due to financial innovation that has driven down spreads. I think if we try and chase nominal numbers, particularly on bond yields, I think we've missed the seismic structural shift that has happened and has actually been happening for 20 years, but it's just caught up with us because the nominal figures have turned from being positive into negative.
Does that mean then that, I mean, Morgan Stanley's saying that we could get a 1% 10-year Treasury yield by the first quarter of 2017, even by some fairly bullish standards in terms of forecasts for bond markets? That looks to be pretty bullish, because they're obviously expecting bonds to go higher if that yield comes down to 1%. They say politics, productivity and policy will be the things that will push that. Do you think that is going to happen? Are we going to be talking about 1% in the US?
Yeah, and I didn't want to dismiss Manus's second theory associated with the political spikes, the political risks, because they're lining up, aren't they, in H2 this year?
Yeah.
We look at the US presidential election against the backdrop of the Republican event this week, and also you look at the requirement in the Eurozone to... Are they going to complete monetary union in whatever guise the Five Presidents report laid out? Are they going to push through with banking union? All the kind of elements to the story that are mired in political risk, because actually there's very little political support for the kind of things that are necessary.